And Fed Chair Powell tried to calm fears about rising prices. Joining us now, J.J. Kinahan, he's chief market strategist at TD Ameritrade, and we get a good holistic view of all these things from you, Joe, because you can bring in the trading technical aspects of things with fundamentals. But at this point, we've just, I think, reduced it to the Fed again. We just did that at the top of the show. Don't fight the Fed. It's going to continue. Does anything else? Does it even pay to talk about other things when we're, when they're in the driver's seat? Powell is still.
Well, absolutely that the Fed is in the driver's seat, Joe. I think you always have to talk about earnings. Let's face it, in the long run, earnings drive markets. From now until the end of the year, at least, and I'm sure beyond until the beginning of next year, the Fed will be the game in town, so to speak. That continues to lead to a little bit of this tug of war of, do we love stocks? Do we hate stocks? This transitory versus lasting debate on inflation, I think, is probably the biggest question we have right now. As you guys have been covering very well the last few days, his testimony on Capitol Hill, staying with the fact that this is transitory. I think the bigger difference is it should last a few months. That kind of wording, I don't know that we've necessarily heard as much before. And so what does a few months mean? It lasts until back to school. Does a few months mean it lasts until the beginning of the year or beyond that? And I think that's really the question everybody's trying to figure out, is what does that mean to him and what does that mean to Fed policy? Because, you've been in the markets a long time, Joe, and it's kind of the old expression, inflation starts slowly and then happens all of a sudden. And so I think that that's really the biggest fear, is that it picks up momentum as we head into the end of the year, the beginning of next year. And back to the original part of your question, earnings always matter. And I think that this earnings week, the banks held up their end of the bargain.
A couple of things, though. Number one, that people have pointed out that this will be peak earnings growth, probably. Not peak earnings, but peak earnings growth. So that the second derivative, that'll start. So, and the second thing is, earnings are great, but the only thing that determines the stock price is what you're willing to pay for those earnings, which now we're back to the Fed. Because if interest rates go up, you're not going to get a multiple of 22 or, I don't know, what do you calculate the next year S&P multiple is at this point, JJ? What's your number?
Well,
it's over 20.
I think it's got to, I think based on everything we know right now, it's got to be between 20 and 24, Joe, don't you think? And again, that's all other things being equal. Back to your point, if the Fed raises rates, I think we all have to reassess everything that's going on. That's what I mean.
So multiples contract, and that soaks up any gain in earnings. Gunjan is here.
But the other...
hold on. I want to bring her in. I don't know what happened, Gunjan. You sleep in or something? The alarm clock's broken? Gunjan Banerjee, good to see you.
Good to see you.
You had some interesting things, some interesting thoughts that I saw in your notes about your view on things. And I mean, a lot of it is similar, but you have your own opinions on whether inflation is going to stay and whether the Fed stays easy for maybe less now after we saw some of Powell's testimony. He seemed to at least notice that their predictions haven't been perfect.
Sure. I mean, to me, there's this huge disconnect out there. When I step out the door and I pay for an Uber or I pick up a restaurant tab, I'm seeing higher prices. Lawmakers this week were concerned about higher inflation. It's something all investors are talking about. But then you take a look at the market, you take a look at the bond market, the stock market, the 10 years at 1.3%. Stocks have hit dozens of records this year. And it kind of shows you that investors seem a little bit more sanguine about the long-term path of things than we might be hearing or even feeling personally.
Shepard Smith here. Thanks for watching CNBC on YouTube.